Okay, my name's Farheen Ali, and I'll be moderating this Ask Me Anything section. What we're doing is inviting the speakers from the day, today or yesterday, to come up, and this will be your chance to ask them anything. And we're pulling up 4 speakers at a time. Right now we have Daniel Araya with BCT, and Brian Lessig with BCT, and we have Phil Sigler with the Lending Coin, and Lehman Baird with Swirlds. So, what I'd like you to do is, right now, stand up and ask your question, and we'll repeat back the question and say say your question and who you'd like the question to be answered by. And if you could come up front, that would make it easier. But, okay, let's open up for questions. Yes, please come on up.
So, should I come up here? Or?
Yeah, just talk loudly so the speakers can hear.
So, my question is regarding emerging markets where disposable income is relatively low. How can blockchain operate in markets where disposable income is relatively low?
Okay, so your question is how can
blockchain be operated in markets where disposable income is relatively low?
Okay. In markets where disposable income is relatively low, how can blockchain be operated? All right, so do you have someone you'd specifically like to answer? Okay, Lehman.
Sure, I happen to be holding a microphone, but I'll give this to the others as well. One beautiful thing is that smartphone penetration is growing very rapidly. And so many people in such emerging markets, even with low income, are able to have smartphones. And a smartphone is practically a supercomputer. It just blows my mind what you can do with a smartphone. So the ability to access a ledger seems to be growing fantastically, where they can actually get into the internet, and there's super low bandwidth but low cost internet access is being done. I'm very excited about how the infrastructure really is preparing these very people to be able to access a ledger. To run a node on the ledger is a much more difficult thing, but you don't have to. You can get a lot of benefit just by being able to access a ledger. And so you can have a cryptocurrency account, and you can have information on the ledger and run smart contracts and all those things. So I think the real hindrance is just hardware and internet access, and that's being solved in a very exciting way. So that's my impression. But others?
So I would say when you look at transactions across the world, we can do business with each other without having to go to an exchange rate. You could get, do Litecoin or Bitcoin Cash and many other tokens for less than a penny. And that to me was super exciting and allows opportunities for anybody to get into it.
Yeah, I guess I'd add to that too that one of the larger problems with emerging markets and emerging countries is governance. And with property being embedded on the blockchain and other sort of like immutable opportunities, it makes governance a little stronger, and it gives people the facilities to then build companies. So.
Thank
Okay.
you.
Our next question. Yes?
This is for Dr. Baird. So you've created something that has a high transaction throughput, asynchronous, Byzantine fault tolerant, all these great things. Why would someone use blockchain instead of Hashgraph at this point?
I have to say I don't know. No, so I mean, what we're doing is cool, and we're getting a lot of traction with what we're doing. I do think that if you look at the history of technology, what you often find is that there's more than one winner in any given market. You end up with a whole bunch of people doing things, and it brings down to a smaller number. But no one person ever does everything in a market, and so there's room for multiple things, and so we can all be one happy family.
Okay. Did either of you want to chime in on that? Okay. All right. Well, any more questions for this panel up here? Now, BCT is doing, okay, go ahead.
This question is for BCT. I was wondering if the terminal, as it grows, you're going to incorporate tools for algorithmic trading, especially for institutional, because they may have, their own specific strategies that they want to implement with regards to trading. So would you have some development to incorporate algorithmic
Yeah, so the beauty of what we're trying to create is with the open source app structure is algorithmic trading and the capabilities associated with that can certainly be developed and incorporated into our system. So, look, as far as we're concerned, from a developer standpoint, the world is their oyster into what they want to have incorporated into the system. Obviously, anything that's developed would be submitted to a centralized location, and we'd have to review it. We got to ensure that no spyware, malware can get into the system. But so long as we feel that this is going to be in any bit helpful to any part of the institutional community and or the retail community, then that app will be on the store as well.
Okay, so the question was, are there going to be any extra tools that, and you're saying that there will be?
If to the extent that the developer community wants to develop it, sure.
Okay, thank you. And we're going to now actually have the mic brought to the questioners. So there's someone back there, and then I was going to bring the mic over.
Thank you. This is directed to BCT. Can you give us an idea of how the institutional investors view cryptocurrency market? Why do they want to be a part of it?
So one of the big reasons they want to be a part of it is I think there's a recognition that this is an asset class that is here to stay. And they're trying to learn more about it. And clearly, look, with the dialogue that they have and the money that they're getting from LP investors, from family offices, from pension funds, from high net worth individuals, they're getting asked about this from those constituencies. So clearly there's a sense that they can bring a lot more money to this, I'll call it an asset class, but they're still learning. Right, and and part of what you're seeing is, like just the other day, we heard that there was a trader at one of the big banks who was making $10 million a year. He walked away from it to start trading cryptocurrencies. So I think part of what you'll see too is at a lot of these hedge funds, you're probably going to start seeing people breaking away and either starting to trade on their own or developing their own funds where they feel that they can actually deliver new money, and investors through their fund into this class.
Okay.
This question's for Dr. Baird. Dr. Baird, it's a simple question. I was just wondering if you could explain if Hashgraph is going to replace blockchain.
No.
All right. So there are many ways to build a ledger. And sometimes when people say blockchain, they just mean ledgers in general, in which case we are a blockchain. But if you look under the hood, there's lots of different ways. You can have a chain of blocks, and you can have various things based on DAGs, and you can have various things based on a leader, and there's just different things you can do under the hood. Hashgraph seems to be a really good way of doing the things under the hood. But what you get is a ledger, which is the same as, some people just use the word blockchain to mean ledger, in which case we are a blockchain. What I do think is that ledgers in general are going to change the world. It's a big deal. There's a lot you can do with ledgers. And you want to build the internal plumbing as well as you can, and Hashgraph seems to be pretty good plumbing. But that's what you want to do.
Okay. I think these questions would be nice to hear from CyberMiles, Mark Brinkerhoff. Would you like to chime in then with this?
Sure. Can you ask the question one more time? About Hashgraph?
Yeah, why would anyone need blockchain if Hashgraph is an option as well? Now, I know can you tell a little bit about what CyberMiles is doing? And you're using blockchain.
Yes, so CyberMiles is like Ethereum for e-commerce. So whereas Ethereum is very broad as a network, CyberMiles is modeled after Ethereum, but tailored for e-commerce.
Mark, why don't you come up here for a minute?
Oh, sorry. So CyberMiles is like Ethereum for e-commerce. It's tailored specifically for e-commerce businesses, online marketplaces. So think of your Amazons, your eBays, your Craigslists of the world. Where those are centralized applications, these types of businesses can become decentralized on a blockchain. So blockchain, like you had alluded to, I mean, it's a very broad term, and when we're talking about technology and infrastructure, it's not like there is one game in town. There may be many players, many tools, many services, but the bottom line is that there is real value in decentralization. There's value for the businesses in terms of transaction speeds, in terms of transaction fees, and there's value for the end user, the consumer. So one of the big topics of conversation and anxiety that many consumers have today is when it comes to their personal and financial information. So e-commerce businesses have access to and are receptacles for a lot of data, a lot of sensitive personal data. And they're vulnerable to cyber attacks, to hacks, so that information can become exposed. And we know that that happens because we hear about Equifax, we hear about Yahoo Mail, we hear periodically, and it seems like it's becoming more and more common, where personal information gets exposed and consumers are vulnerable. So how do you limit the vulnerabilities with that information? One of the ways you do that is through blockchain, where those data sources become decentralized. So there are fewer points of vulnerability, and that information can become encrypted. And so there are real advantages to businesses and to consumers. So it might be, the Ethereum network we're talking about, Hashgraph. It could be, I mean, there's multiple ways in which this can be done, but the bottom line is decentralization is good for business, and it's good for e-commerce businesses in particular, and that's exactly what CyberMiles is trying to do. It's to develop a true decentralized platform for businesses like this that can be open source, that can be available to businesses new and existing all over the world.
So CyberMiles is being agnostic as far as which decentralized platform.
Absolutely, because it's mainstreaming the technology, and the technology will mature, and there will be many players who are trying to mature it. But in order to go mainstream, it has to be widely available, and it has to be accessible.
Okay.
And that's a great answer. All the really exciting stuff is happening at layers above the ledger. The ledger is just boring, it's just the foundation. So we're just doing the boring part. What you're doing is changing the world. We're just going to make a nice foundation.
Okay.
And there needs to be partnerships, there needs to be collaboration.
Exactly.
So
Exactly.
you have to be a team player and you have to be a collaborator. And that's one of the things we're trying to do by modeling after the Ethereum network, is understanding the benefits, the advantages that people are finding, and then trying to improve on that. Yes.
Okay, now I don't want to throw your tomatoes at me when I say this, but does it not concern you that on the path to decentralization, like full decentralization, almost every single approach that has been taken has been flawed, just because at its core it's extremely difficult to do? Like, does that not concern you?
Okay, so if you can repeat the question.
I heard it.
Okay, and answer it.
Yeah, the path to progress, it will never be perfect. It's a path toward perfection. So yeah, I mean, it doesn't concern me or us as an organization, and it shouldn't concern everybody in this room, that there are great ideas that are flawed, or that have not been done well or executed as well as they could have been, because there are people who are learning from that and are learning to improve on that. And technology is evolving. It needs to be evolving. It can't be static, it can't be rigid in order to grow. And that's what's beautiful about blockchain, what's beautiful about open source technology, is that we want more people, we want more ideas, better ideas, contributing, improving. The next iteration of it will be better, will be stronger. I think everybody here would like to be a part of that. But it's going to happen regardless of if we're a part of that. And so those who stay more open-minded and more collaborative and are really welcoming the opportunity to iterate and improve are the ones who are going to be the leaders of this?
Yeah, we are still at the early stages of a revolution. I mean, this really is going to be changing lots of things. And so, yes, we have some growing pains and some flaws at the moment, but we'll get over those, right? As an industry, we are about to do something that is truly significant for the world. And so people will say, well, I heard of a hack, and so therefore all of ledgers are bad. Well, no. You know, this is just growing pains for an early thing. Yeah, we should have another chair up here.
Now,
But you know, we are in an exciting field. This field is really cool. And we have some problems, but that's fine. That's what you'd expect in the early stages.
now here's a question that keeps coming up in the space: is Hashgraph going to replace blockchain? And I am thinking this might be a good question for Simon, you to chime in on. Yes, if you could go stand next to Lehman, please. That would be great.
I mean, there's always pros and cons for every solution right now, and I think that's one of the biggest challenges. Even blockchain protocols, there's 20 or so that you can choose. So, I mean, it depends on what you want to do. I mean, so did you want to bet on Amazon or the 20 other competitors when they're trying to sell books? It's a very similar situation. And so from a company perspective, you have to just be willing to take the risks.
So are you using Hashgraph or are you using?
We're not.
You're not. Okay. Okay.
Okay. So I have a question. Maybe this is directly to BCT or anybody who can answer. So BCT, where it is trying to bring institutional investors pattern into the cryptocurrency world. So, and you have seen the cryptocurrency market swinging up and down, and major player, handful of players can just swing the market up and down. So in that regard, do you really see that you can apply the traditional rules of stock, the way how traditional stock market does? Can you really apply those tools? Because the variance are really high and you don't really expect to see what's the reason for that. So, it's kind of scary to see the future in this way.
Well, so the reason why it's swinging all over the place is there's no liquidity in the market, right? So when you have no liquidity in the market, small purchases or sales can move a market in a significant way. It's no different than the traditional stock market, right? You got stocks that are extremely liquid, and you've got other stocks that are closely held, and the float on it is much smaller. So if someone comes in and they want to buy 5% of a company with a very limited float, right, they're going to move that stock in a very significant way. It's no different here. When I alluded to earlier, when I was up on stage talking about the story that Richard Titus shared in terms of waking up every morning and selling a little bit, right? Because he had a lot to sell. He couldn't sell it all in one day, because if he sold it all in one day, he'd be driving the price down dramatically. And that's, so from that standpoint, from an institutional standpoint, the more money that can be brought to the table, the more liquidity you're going to have, the less you're going to see those massive price fluctuations in one direction or another on a day-to-day basis. You're still going to obviously see price fluctuations because you're going to have different perspectives on and different positions each day in terms of who's getting in, who's getting out. But at the end of the day, the more money that's in the system and the more demand that's in the system, the more you should have a reduction in that significant variability that takes place from day to day.
Okay, so is that one of your goals with your company, to cater towards hedge funds and larger corporations to bring in more money into this space? I think that's what Daniel was saying.
Yeah, it's part of it.
Part of it.
Part of it, but the underlying goal is not.
Is your mic not working?
No, it's not working.
We'll need the other mic.
Working for me.
Oh, there it is.
I mean, if you look at a mission statement for us, it's the specific mission statement is not to bring more liquidity to the marketplace. There's a significant demand in the institutional community. They want to get in, but they don't have essentially the capability at this point because there are no rules and regulations at this stage. So we're delivering a mechanism for allowing for participation in this marketplace. And out of that, the ancillary benefit is it's going to bring a significant amount of additional liquidity to the marketplace, which will benefit everybody, should benefit everybody.
Okay, one more question.
It's an open question for anybody in the panel here. We're an early stage venture fund. More and more businesses that are coming in front of us, they are trying to integrate blockchain into their business model. But one thing that's always been a catchy part for us to truly understand the cost implications of this. If somebody could highlight on it from a Hashgraph's perspective, Dr. Baird, or some of the other panels, how can we better understand by replacing or enhancing the current business model and replacing with the blockchain? Can a business sustain purely from smart contracts perspective, blockchain transaction perspective? Every time a transaction's been written on a blockchain, what sort of costs are associated with it? I'd love to hear your thoughts, though.
Yeah, so if you're going to use something like a ledger, you absolutely have to understand the costs of it. And this is critical, of course. If it's a permissioned ledger, maybe in some sense your costs end up being lower than a public ledger. That's a possibility. The cost might just be the processing power and the communication bandwidth that you're having to pay. But there's always a cost. Nothing is ever free. And I think that crypto economics and other ways of looking at these things from an economic point of view is incredibly important. There are some resemblances to the dot-com era when someone would take just any word and add .com to it and hope that was an idea, and it wasn't. But as in the dot-com era, there are Amazon.coms and eBay.coms today that are going to do just fine because they're really doing something. And the story of Amazon is they sat down and said, what is really the right way of doing things, the way that makes the most sense economically? I know, we'll sell books. It wasn't just random, oh, I have books, I'll say books.com. It was something really thought out. And I would say that new businesses that are interested in getting into the ledger space need to be very careful about this. Let's not just do it because this is the new shiny thing. Let's make sure that the costs and benefits actually work out. And if you're careful, you can find things that are really good applications. But you absolutely have to go into it with your eyes open. You should be thinking about these things, not just saying, well, ledgers are cool, let's just throw it on top.
I'll just add a little bit to that, where I notice a lot of people are coming out with ICOs, right? We all see that, right? So the difference is looking for something, and I think that's a bad word. We should maybe look at calling it more like a phrase I've been using as a TAO, which is a tokenized asset offering. And I think that's really what SEC and other regulations are looking for. They want to make sure it's an asset-based business, not just a thought or an idea. Not just saying, hey, I'll create a coffee coin or something in those regards, right? So then there's nothing to it. But if you have something that has some real meat, some real grit, and something that really keeps it going, that's what SEC and other people are looking for.
Okay, we have a question up front here.
I think this is for BTC. Do you think it's too soon for crypto derivatives and marginal trading?
You asked me that earlier outside.
No pressure.
It's a hard question to answer. Look, there's a lot going on right now with the Securities and Exchange Commission and the views as to, are all ICOs securities, are they utility tokens? So at this stage, to be trying to create derivatives out of all of that is probably a little premature. Having said that, if there are offerings that are classified as securities and and they can't be traded for a year because you're doing a private placement, is there the potential that someone out there will create derivatives associated with that? Sure, I'm sure that's a possibility. You've seen, the futures being created on Bitcoin. I think really before you're going to have a healthy derivatives market for this, you need to have a completely healthy underlying core trading market, which really isn't there right now at this stage. You want to add anything? Or?
Okay, so.
Yeah, I'll just add to that we need regulation, right? We need stability. We need a framework. We need governance. Then those things will follow, I think.
But I mean, how long are you willing to wait for the SEC to do that?
Well, as long as it takes, right?
Okay, so I think we'll need the lawyers to chime in on this. And so what we'll do now is take one last question for this panel, and then the legal panel and a few other speakers from earlier will switch places so that we can have questions there. So one last quick question for this panel here. Okay. Ryan.
Hey, so what do you guys see, just for anybody, as the biggest threats to this space, to the blockchain and cryptocurrency space, or otherwise, if you just see it as being inevitable that, this becomes a new paradigm, but to me, there has to be some threat, right? Everything seems very optimistic.
Just from a company perspective, this is always on our mind. So two biggest things, regulations and banks. So, the hardest spaces to disrupt are the guys that have money and power. And governments, when we're looking at cryptocurrencies in general, a lot of the people believe that it makes a lot more sense because like the Venezuelan, the currency doesn't make sense. The governments have the power to constantly just print money and just keep inflating their tokens. Well, no, their currency. Now I'm getting terms mixed up. And like Brazil, the currency is devaluated 7 times over the past several years. China is constantly printing more money as well too because they want to keep hyper growth competitive levels across every single industry. And then, when we're competing with governments and this becomes a $1 trillion industry, then this becomes a real threat. Then they're going to say, oh, maybe we need to shut off everything. Then it could no matter how great the technology is, it could disappear overnight because you can't fight with the governments at the end of it. There's also banks. So Wall Street says, okay, this is becoming too much. We're going to lobby against it and have all the Wall Street journals and everyone post about how much of a fraud this is and all this stuff. So we're competing against the 2 biggest powers. So that's one of the biggest risks that I see.
Well, I would just add that my biggest fear would be the securities behind it and making sure that whenever a token is launched that we don't see new hacks come out and more people stealing those things. And I think there's a lot of insider stuff that happen with even like NiceHash or where something goes wrong and it really corrodes the market. And I just hate anything that puts a big negative blemish on the whole crypto space. And we see a lot of that.
Okay, thank you. Let's give these guys a round of applause, and we're going to switch panels. I'd like to have